All right. So we're going to look at the index. So what happened this week? This was a short week, right? So Monday didn't move much. It was near the high on Nasdaq. Tuesday, Wednesday, when it came back from the holiday, also a really mild day. Didn't move much. And then Thursday was the big gap down day. And that was the really bad day. I think it was a lot of selling that day. Yeah, you can see the volume like really sky high. It's even interesting that Wednesday volume was also really high. Like, you know, it looks like there's definitely selling on Wednesday too. So Wednesday, Thursday selling, and then Friday, the market opened up pretty strong, but then it kind of dwindled by the end of the day, and this is nasty. You see how like it's parabolic, right? And no buying whatsoever. Like this is, you know, this is like almost like yeah, almost 2 hours, more than 2 hours of selling. That's kind of insane. A little bit here. So so this is the Nasdaq chart. So yeah, it didn't close strong at all, right? And then if you look at weekly chart, I think it's you know, so we have this strong run, you know, like 8 weeks here, and then we have this one down week, mild down week, and then we have another up week. So 9 weeks, and then we have another down week. Now, the problem right now, like, there's obviously lots of selling right now. I guess the question is like, you know, you want to ask yourself, like, is this uptrend going to continue, or is this selling going to turn into more selling, right? Like, that's probably the question here. Now, it's still acting like, you know, when you look at the weekly chart, it's still acting really well, because it's like this is the 50-day slope right now, and it's just coming back to it. It hasn't even touched it yet. You know, there's still lots of room, you know, where it is. Like, definitely it could come and touch this 50-day. That's probably a possible case scenario right now. You know, the other problem is obviously this resistance at the top right now, because it's tried a few times now. It couldn't make new high, right? So you see like 1, 2, you know, it's starting to show that it found resistance here. So 3 days of not passing this high, and then even on Friday, the reversal is not good, right? Because people didn't want to wait for it to come near the top anymore. They just want to sell by the end of the day. So yeah, so this is not a good sign, right? From an at least short term. But again, you know, we still have this 21-day support. If it breaks 21, then it's probably gonna go to 50. So there's a, you know, if it breaks 21, it hasn't break 21 yet, but if it does, there's a high chance it's gonna go to 50. Which is, you know, can be a significant correction here. Well, let's not call it correction yet. It's just a pullback, because we have this pullback. It rebound really strong, which is a good sign. But now it seems like it's going down, you know, much easier now than this time right here, because it just took like a couple of days here to drop, you know, pretty fast. But again, yeah, like, you know, obviously Nasdaq represents a lot of tech stocks, so you kind of have to, if you own tech stocks, you have to kind of look at that and say, hey, are they, I would say if they're acting relative strength wise, if they're acting like equal, then maybe you can hold on to it. But if they're acting like relative strength going down, like your stock is actually performing worse than the index, then I would say probably you want to take your profit if you like profit, or just get out for now, or sell some at least. Because, you know, unless you're willing to let it go down to 50-day, that's probably the question here, right? So there's definitely more risk on Nasdaq chart, but S&P. So I was listening to Marcus Smith earlier, and one of the things that they talk about was this divergence between Nasdaq and S&P. So you can see Nasdaq didn't make a new high, but S&P did. And so that's what they call a negative divergence between the two index, which is not good. Okay, in general, it's not a good thing. Whenever there's negative divergence between those two index, it usually means something's not right. And they even use examples like the previous top in December 2021 was had the same thing happen. So you know, but obviously it's too early to tell whether this is you know, temporarily, but short-term wise, yes, it looks like there's a negative divergence and it's not a good thing. For me, I always like to look at all the stocks to get a better sense. That's kind of like, you know, I like to see all the stories align. So are we seeing, like I say, are we seeing Nasdaq stocks toppling right now? That's probably the best sign to confirm whether the index is actually weakening significantly. So so this negative divergence tend to happen because they're trying to fool people, you know, telling you one side, like, you know, one side of the story is still good, but really it's actually getting worse. And then people just keep holding on, and then, you know, as it corrects, you're already too late to sell by the time it hit 50-day. So and then once you get to 50-day, obviously then it becomes a bigger challenge, because now if it breaks 50-day, then it goes to 200-day. So that's why, you know, that's how corrections happen, and people, you know, either you're too late to sell, and then once you're too late to sell, you kind of hold on to through the whole correction. That's usually what happens. So that's why and then the other thing is obviously earnings season is coming up, so things could change drastically, right? If companies don't perform well. So those are things to keep in mind. Overall, I feel like this week was a big test for the market, and to me, the test seems to pass. But again, I can't just use this week as a good barometer, because it was a short week. It was only really 3.5 days of trading, because, you know, Monday was half day and Tuesday was off, right? So it's not enough to give me that sense of, oh, it has successfully tested the 10-day or even 21-day. You know, it's still too early. Like, maybe next week will be a better indicator, because it will be a full week, and if it doesn't do well, it'll probably crack this 21-day, I think. Okay, let's go to Dow. Dow, this is something that I'm not liking right now, is how weak the Dow is. Like relative strength, you can see how weak this is. Oh my god, look at this. You know, even though the index looks like it's just going sideways, but the relative strength is just constantly going down. And that's unusual, okay? But, you know, with that being said, like, you know, we just finished June, and June, you know, we know, you know, industrial was the weakest performer, right? I think year to date it was like up 1% or something, really, really minor. Compared to S&P was up 15%, and Nasdaq was like 28 or something. I can't remember, 30%, something around there. So now the question then comes, like, is this really been, sometimes market do rotate, and, you know, even though this index is really like not performing, but again, the same question, right? I'm going to look at all the industrial stocks and how are they performing relatively. Are they also not performing, or are they picking back up? Are they getting rotated? So Friday, we can see it, you know, it's still down on at least on the index, right? And then we go to IWM or Russell, and the Russell is really a unique story. Like, even though the chart looks almost similar to industrial, but it actually did the opposite of Dow Industrials, right, on Friday. It actually went up. And here's the 10-day line. It's now sitting exactly at 10-day. It didn't give up much, right? The chart, like, you know, I was looking this on the daily chart. So here, this is the Nasdaq daily chart. It looks really ugly on Friday. SPY also looks somewhat ugly, right? It actually end up turning red, like just a little bit red. And Dow, you can see it was near bottom, closed at the bottom. And then IWM, it gave up, but it wasn't giving up much, like compared to the others. So this could be a rotation happening right now, into small cap stocks. Okay, because that's what Russell represents. So that's why I'm actually like my portfolio has more small cap stocks than large cap. So I actually did okay on Friday, like, you know, whereas yeah. So I'm actually optimistic because of this. But again, I don't think you know, it's gonna be all the same. I think this tells a very good story what will happen in July, and also earnings seasons will come, and it's possible the large caps might have a stronger pullback than most people think because of you know, possible rotation happening. But again, we won't know. This is too early to tell. This is just one day of action. Because before Friday, look at Wednesday, Thursday, it fall pretty hard too, right? So, so Friday is just a little change in tune versus the other three index. So, but yeah, but you know, I think for Nasdaq, I think we have to be careful because many stocks are extended, and also because of the divergence, you know. Because Nasdaq has been leading, right, the whole time in this rally, and then now all of a sudden it's not leading no more. All of a sudden S&P make a new high, but this guy didn't. So that tells you a lot about you know. So for example, like if we go back to 2020, right here, I tried to count how many weeks up, you know, like for example, like this one, you know, from the bottom, 23 weeks up, right? And then from here, you count from the bottom, it's 15 weeks up. That's the second leg, right? So here's the first leg from 2020 bottom, and then another leg here. So 23, 15, like before a correction happened, right? And so, you know, we are like, I don't know, 3, 4, 5, 6, 7, 8, 9, 10. We are almost at 17 or 18 weeks here, you know. So we're getting to that point, right? Like I think average is around 18 weeks. Like IBD studies show that average is usually a rally lasts 18 weeks before it does some sort of pullback, stronger pullback or correction. Like it's either 7 to 10 or 12% correction. Usually 7 to 10%. So so we're getting there, not quite yet, but we're getting there. So this is roughly 18 weeks right now. So we gotta be mindful that, you know, and like I said, most stocks are already extended, and it wouldn't be unusual to correct, give back, you know, 30-40% of that gains, you know. So that's why we gotta be careful now trying to buy extended stock. I think we're near the end of the possible run, at least short term, before we get a nasty kind of pullback or correction. I don't know how deep this first one was. 12.074, 10.519. Yeah, that's almost 10%. 12.074 minus 10.519. So, okay, this is the more severe than I thought. Almost 15%. So, you know, and so we gotta, like I said, we gotta be a little bit careful here, because the thing is that most likely towards the end of the year, unless like there's some macro news come out, but if there's no any negative macro news, like you know, let's say recession related, right? If there isn't anything like crazy like that happening, and everything just go the way it is right now, then yeah, like, you know, we are a little bit extended, and maybe it might go up maybe like say even more in July, a little bit more. I don't know. But we are near the end, right? Like, by end of this month, it'll be like over 20 weeks and we're getting close to the top. So, so yeah, it's time to think about taking some profit. And again, if you're a super long-term investor, then obviously you don't want to sell. But if you're short to medium term, maybe you want to take at least some profit and then wait for a pullback correction, and then you can buy at a lower price. So that's kind of what most people do. They trade around their core position. Your core position could be like, let's say 50%, and then you trade around the other 50%. Like, again, it's up to you how you want to build that position. But that's what Charles Harris, he was on IBD yesterday. That's what he does. He trade around a core position. He didn't say exactly how many percent he is his core, but in general, he's like, if you have 50%, you always keep that 50%, and then you take the other 50%, you trade it, right? So, yeah. So basically, some people do that. It's not a bad strategy. Obviously, you have to know what you're doing. But yeah, we gotta be more cautious now. So anyhow, that's the index. Any questions on the index?
No, sounds good. Yeah.
So
basically,
yeah. So we talk about negative divergence here between the two index. Let's look at the advanced decline line for a second. So this one also have a divergence a little bit. So this is S&P, and this is from IBD newspaper. You can see this blue line here is the advanced decline line. This is the index itself, and you can see S&P make new high right here last week, and you can see the advanced decline line shot up to a new high as well. And then you see the last few days it dropped a little bit, and then on Friday you see it bounce back. So this looks pretty healthy, right? The advanced decline line is following what the index is doing. If we go to Nasdaq, this is Nasdaq. So here you can see this was the last new high right here, 1380.64, and then you can see the high here on the advanced decline line. And here we didn't make a new high, but look where the advanced decline line is. It's much lower than the previous high, right? Even though this high was close to this high, but this advanced, like, it's a little bit subtle probably from your angle, but it's quite far away. It wasn't even close to where the previous high is. So and then look at the bottom of this decline line, advanced decline line. It's also like trading really near the low, versus this is like the index still near in the second, like near the halfway point, whereas this already near the low, right? So Nasdaq doesn't look healthy, is what I'm trying to say, right? Because the advanced decline line just really not as many stocks advancing as they're declining right now. So that's a bad sign, right? So yeah. So that's those are the divergence between the two index, which is interesting. And like I said, Dow is not acting well as well. This one doesn't show advanced decline line because it's just dirty stuff. But again, Dow is at the bottom of the range right now. So the only index that's doing somewhat okay is the IWM right now. And S&P maybe. We'll see if this divergence will continue or whether this is just a fake move. Because Friday, it's still holding up strong, S&P. So we'll see. I think, obviously with the bank earnings coming out on Friday, it might foretell what's gonna happen after that. Yeah. This transport, let me go to this symbol here, IYT. See, this is showing, this is really real market, right? You have the industrial index going down, the Dow Jones anyway, and then you have this transport group going up. Look at how strong this is on the weekly chart, right? It's bounced last week to a new high, and then this week, look, it didn't give back any gains. In fact, it was up just a tiny inch, but still, it just shows that transport usually represent you know, there's lots of transports, you know, being happening in the commercial world and maybe even industrial world, and so therefore it's like a signified opposite of recession, right? Because you know things are picking up, and this is a very strong uptrend right now. Because you know if you draw the 10-day, it's at almost 45-degree angle, so that's a very strong uptrend. Yeah, this is breaking out and it's moving higher. So I'm positive. Like this is a positive sign, right? That again, there's no recession. Yeah. Okay, so that's that one. Okay, so this is IBD 50, which is their top 50 growth stocks index. So last week it broke out really strong. Last week was a really good week, by the way, and we didn't do a video, but and last week I took the opportunity to trim some of my portfolio, the weaker stocks, based on using last week. Like last week was a good sign. Whenever you see you have a strong like week, look at the stocks in your portfolio. Like I own many stocks, I'm more diversified that way. So I look at all my stocks and I say, hey, which one didn't perform well last week? Because it should be. And so relatively speaking, if it's not performing well, then you know on a strong week like last week, then I should trim them or get rid of them for now. And so I did some, right? At least the weaker ones. And then this week, you know, we like I said, growth stock give back almost half the gains from last week. Not quite, but maybe 40%. So but why I'm bringing this out is because I feel like this is a very important index, because this is represent the growth stocks in the IBD list, and for a long time it's been building this long base. It just couldn't move, and even when it bounced above the 200-day, because this is the 200-day going down, even though it bounced above it, you can see there's no power. Like it wasn't like, hey, I'm gonna decisively move above that, and it just kind of linger, fall back below it, and then bounce off it. And then this was like I said, this was last week, right? This the week before, and it was really strong. Like this is now is saying, hey, decisively they're taking that move. And then this week we gave back some. So overall, and then Friday. Okay, so let me take out all those lines again, just so you can see clearly. It's hard to see, I know, probably on your side, because the chart is really tight. But on Friday, it actually closed positive, right? Up 0.44%. So it actually, you know, did better than Nasdaq. So what I'm trying to say is, you know, it is possible that growth stocks now are starting to move. And so that will be very important, and not just, you know, tech, right? I'm talking about like on all sectors, right? So if that's happening, this could be, you know, really good sign, right? Like again, we don't know what the slope is going to look like or how fast it's going to move, but if we can find support here, and they bounce off it, because we saw lots of selling here, you can see even on the volume side, Wednesday, Thursday. But if it can bounce off this, that's good. That means, you know, some people may have sold their growth stock prematurely, you know, and so this is another good sign I find more interesting, that it didn't break down as hard. Yeah, so there's lots of good stocks. I think right now, again, I don't know who to believe. Always be mindful of who you believe or what the story is. There's a lot of people say, and these are all leaders right now. Like we can jump into it right away just to get some good examples. So this is Palo Alto, you know, really strong run. It's starting to show some weakness right now. You know, you see how it fall below 10-day, like close at the bottom, didn't even try to come back. Those are usually a sign of like weakness. But these are the strong ones, right? If you miss this run, like this is 20% from this pivot, so it's already had a 20% gain. Now it might come back. So again, we have to be mindful of 10, 21, 50-day. where it's going to stop, we don't know. But these are the leaders, okay? PANW, Adobe, right? So this was the run right here. It somehow peaked here. I'm not sure. Yeah, I don't know. I don't know what happened that day. I can't remember. But now it's kind of going sideways. So this is a good action because it's just going sideways. It's not giving up much. It's made like 2 weeks now. SMCI is still doing pretty good. It's trying to go for new high, so that's something to be careful of. If you can't make new high, it's gonna fall down hard, right? So that's usually what happens. So we'll see. And then we have ACLS. So this one make a slightly new high and then it fell back down. So again, this is the run right here. So now it's pulling back in. I don't like how, you know, this pullback, like, so what's happening like Nasdaq is that it pulled back once, try to come for the new high, right? The Nasdaq did try to do that, and then it pulled back now again, right? So like if it fall below this low here, it's gonna fall hard. There's no doubt about it. Like, cause people are gonna give up, right? Because this is the second time now. So that's why it's more crucial this time. If it fall again, there's gonna be much more people selling. The first time people just like, hey, let's just try to hold on. We end up, you know, it's a strong market. But if the second time it fall, everyone has a trigger point now, right? At this level, everyone has a trigger point at this level right now. So if it fall below that, like, you know, every tech stock like that kind of mimic Nasdaq will have the same problem. So this is ACLS, another strong leader. Celsius. So this guy, you know, it's not like this. It's very subtle, the run. Like, I think this chart is kind of like squished a little bit, but it did make the 20% gain from the pivot here. And so now it's just going sideways again, holding strong. 10, 21 day bounce off 21 day here. Yeah, this is another leader. If it built a tight base, this would be another good entry point later. So Lee Auto, this one was a interesting gap up, but then it reversed. So that's you know, possible top there. So again, this one also another strong leader. Now it's pulling back. So we'll see how far it pull back. Uber, same thing here, almost make the, so here's the 20. Look, it's funny how all these ones that we're just looking at is all had made 20% gain from the pivot, and now it's starting to pull back. So so, you know, again, you see it's mimicking the Nasdaq, right? They make a new high, and then the second time around they pull back, they couldn't make a new high anymore. So that's why you see a downward slope now. So they now really consider downtrend now. And then SHAK, another strong stock. So this one, yeah, still now you can see the slope line like this. Yeah. So this one, yeah, SHAK. It's another one, SHAK restaurant. So yeah, they all have very similar patterns. Interesting. Go is not doing well. I don't really know what the story is, but this week it broke pretty bad. GLD. Okay, so this is the downtrend right now. So this is the Go shares. But if we look at like, okay, WPM. Yeah, so you can see this downtrend is getting severe now. OR was just a stock I used to own. See, this downtrend is like, it pop up here. Like, I almost buy it here, but I didn't. So, and then the next day it just reverse big, and apparently the president is leaving the company. But now you can see it bounced back up 200 day. But it's still below the slope, the downtrend line. So we'll see. AGI is used to be another strong one. So the gold stocks taking a beat this last week. So here's similar chart pattern, like OR, come back about this trend line, but then it fell. So that's really negative. Like this is when this happened, I would like definitely not go near it for a little while, because that's a fake move, and whenever there's a fake move, those are the most dangerous moves, because it tells you someone's selling big time. Even some, I don't know what's happening in the casino stocks. They dropped really big this week. So this is Las Vegas Sands. Strong leadership before, but right now it's having some trouble. WYNN have the same pattern, Wednesday, Thursday. It's trying to rebound on Friday, so we'll see. Like, here's the low, right, of the base. So it could be just a shakeout here. Let me go back to Las Vegas Sands. Yeah, see, very close to the low. I don't know if they broke it or not, but Friday it bounced pretty strong. It gapped up, so that's good. It closed at the top, so it could be a shakeout here. Sometimes in the base, you get like multiple shakeouts before it finally, take off, right? SMCI was the best example. A lot of people got shaken out. Even Charles Harry said, yesterday he really, this was the area of shakeout right here. A lot of people got shaken out because it shakes out people like a few times, right? And then finally it works, and then people didn't believe it. So that's why sometimes it happens in the base, and that's why it's called base, because it's trying to shake out all the weakest investors before it finally take off. So those are things to be to consider. So Friday was really the big news day. Thursday, the market dropped hard because of the ADBE report, where it reported something like 400-something thousand jobs increase in the private sector. But then Friday, it report overall actually only 209,000 jobs versus I think it was 240 expected. So it was actually lower. So the market actually was happy in the morning. Wage increase is still really high. It's still 4.4% year over year, but that matched expectations. And then the really shining group this week was the oil and gas group. Jewelers, fuel services, those are really strong. Solar stocks came out on Friday, but that's a very volatile group. Agriculture, chemical players were also doing well, right? So we'll look at some of those right away soon. Home builders were breaking down. So let me go look at. So this is also interesting, right? So this obviously this group has been doing really well. You can see it goes up, build a base, goes up. Now possible building another base. So nothing wrong with that. It just needs to take a break sometimes, especially after more than 20% gain. Usually that's what it does. So that's what's happening right now. But it's very clear, like this. So this is the index is pulling back. So last time it pulled back was right here. This one was the bigger base. This is like the longer base here. So this one is just a pullback, really short. So, but yeah, if you look at some of those names, let's look at TOE for example. TOE, okay, this one is the strongest one. Still near the 10-day, which is incredible. DHI, okay, so now this is below 21 day now. The pink line is 21 day. It's below it. It's near 50 now. So when they drop really fast. TMHC is another smaller one. So this one is okay. So near 50 day. Yeah, there's so many in this group, and we are. This is another one. Yeah. So anyhow, I think the PHM Palti is the one of the big, like the strongest growth one. Yeah. So now this is 21. So it just dropped to 21 in like 2 sessions here. That's why I said Thursday was a lot of selling in some areas. that you know, if your stock has those 2 days of big drop, I would say something doesn't look right in those areas. Anyhow, okay, so that's the home builders. Let's jump to back to this jewelers group, because I think those are the strong ones, right? Jewelers and field services. So let's go look at my group here, and we're gonna look at drilling. So CHX is one of them. Look at this guy. Look at this bounce on Friday off the 10-day. That's really strong. This slope is really strong. It's like 45-degree angle right now. It's still in the base, so that's good. Like I like buying stocks in the base. I really like doing that now, just because you get an earlier entry point, and it has more room to run before it become obvious. A lot of people, you know, if you follow IBD's traditional style, you tend to buy at the previous high usually. Nothing wrong with that, because we in a bull market, it will go up another 20% from that pivot usually. That's the goal anyway. But I like buying it lower. That reduces your risk. So if you draw a trend line across from the top to the right side of the base, usually, you know, it's probably harder to see on the weekly chart, but like right here, right, you can see there's a handle forming here. So this is kind of like a low handle, right? And so you know, so you can see I also draw a previous one here, right here too. But in the base, you know, basically it's making new highs. As it makes new highs, it pulls back, and that gives you an opportunity to buy on the breakout of that trend line. And so those are lower entries. And now you can see there's no more handles forming right now. It's just moving really fast now, and we are near the top, right? So that's what happens on the right side of base. It can come up really fast if you miss those low entries, and then the next entry point would be like, again, breaking out this pivot right here. So this one has been not the best performer in a long time now. It's just keep building base and base and base. So we'll see if it works this time. It could build another base at the top here. I don't know. But the drillers are moving for some reason, despite oil and gas. And I mean, even oil in general hasn't. Like if you go to US oil price. Okay, I guess it did come up this week. Yeah, I did. I think it closed at 72 something, right? So you see that. So this is I got an alert on Friday. Right here. This is a trend line. This is multiple weeks of trend line here, and it broke above that decisively. So to me, that's a good sign. Like I don't know what the oil story is, but for some reason, the oil price want to move, and that's not a bad thing, right? Like, you know, let me just see where it closed. Because the last time I saw it was 72 something. Oil. Okay, see, it closed at above 73. So it definitely make a new high, like recent high here. So this is a strong move. Again, I'm not saying oil will shoot up like crazy. I'm just saying it might be range bound. Like last time it was around here. I think it was like near 80. So it could move back up to that, right? And even though when the oil price moves back to 80, $7 range, the oil stock can move up a lot. So at least for the short term. So we're finally moving. NE is another one. This one had negative earnings, so that's why I don't buy it. But look at it, Friday it broke out. So here's the lower entry trend line right here. I didn't buy it because I said it's negative earnings, so I don't usually touch negative earnings stock. But based on the technical trend, look at how fast it moved. In five sessions, it broke out to a new high. So there's some huge momentum happening in some oil and gas area. SDRL. Again, all these are in basis right now. Here's a lower entry point. This would be the day right here to buy. It did pull back and then it bounced. Look, 3 days to go down, 1 day to hit new high. That's crazy. That's exactly what you want to see technically. It shows how strong this area is. P10, let's look at that one. Look at this look at all these stocks moving big on Friday. Like, that's the biggest move since like right here. We'll see if this is sustainable, because if it is, it's gonna move fast the next week too, I think. The field service also really strong. Tidewater, this is a leader since last year. Look at this base. It's built this long base, and then in this base it even tests you many times, right? So let's say you bought it here, it came back, and then here's another one, it came back. So it tests you many times in the base, and then finally, right here is probably the last chance to buy at a lower price. And look at this, how fast it moved. Just incredible. Breaks out. Look at this. In 5 sessions now, it's almost near like 15% gain. So it just moves so fast, like, so if you miss it, you miss it. And this is like really strong leader. Like every time it runs fast, 20%, like really fast. So, but it also built bases after that. Yeah, this group is really strong. TD, oil, OII, Ocean Engineering. David Ryan was talking about this one this week. Look at this move, right? So it's just big week. This is a big week for a lot of oil and gas group, like some of this group. This is another entry point right here if you missed it. So my like this is the first one I found, and this is the second one here. It's really fast they move. Oh my. Like, this is probably something that no one even talks to. Like Schlumberger, Halliburton, these are bigger cap guys. Look at that Friday move. Just one stick up. Like, when's the last time you saw this? Like, this is some behavior has changed. So you definitely and again, they're still low in the base. It hasn't broke out yet. So I would assume they're all gonna break out. Like, it's just a matter of time. And some of them already did, as we saw. So I think it's a really good time to get in. Okay, so I did draw this trend line already. That's low entry point. Here's another one right here. This is too short, but anyhow. But yeah, here's the big day. So, oh yeah, AESI. This is IPO, I believe. It's doing. Something, close this. Okay, there you go. So this one is a little bit more messy. This is an IPO stock, but yeah. So it fell this one, entry point, low, and then it came back and try again, and then this time it seems to work. So this is where my trend line is. It broke out right here, and then it tried to come back a little bit, but it didn't go too far, and then you see how it closed at the top. So it just didn't want to go below 10-day, and then on Friday it just basically make a new high in this space. So again, this one is definitely more volatile, but it's also IPO stock, so has potential. Yeah, so those two groups are pretty good. Another group in the commodity sector, machinery is also doing well. I'm not going to go through each of them just because of time. But WFRD, I'll go through this one because it was on my list on Friday. You can see almost near new high. Oh, actually it broke out. There you go, it broke out. So this is what's going to happen. A lot of these stocks going to break out, and most likely will go, somewhat like 10-20% probably gain after that. FTI, DRQ, those are really good. Transport group. This one I took a lot of positions this week. They did really well. I believe it was, can't remember which day. What's the day that I got in? LPG, I've owned this for quite a while now, and so it's slowly moving up. Right, you can see this is almost near the 20% gain now. Yeah. So this one I already had this position before this week. But there's some of them I bought this week. Let's go to TNK. So here's yeah. So this one hasn't moved much on Friday. I'm a little bit disappointed. It should have made new high on Friday, but it didn't. But yeah, I just draw the trend line here, and then it sneak out on Wednesday. So Wednesday was the day. TRMD. This one. So these are obviously the weaker ones compared to LPG, but this one also sneak out right here, right here. We'll see. This is definitely not as strong as the two other groups I told you about. But this one I wasn't owning much, so that's why I want to take some positions, because usually they move in sync, right? Like maybe relatively they might not be the strongest, but it's still gonna move. So this one did make a new high on Friday, so that's good. So this is really low entry point. My risk level is really low. See, this is the bottom. So if I buy it here, the entry, like, it's like less than a few percent, right? So that's why I'm willing to take that risk, really low risk. And if we move, it has a lot of room to run, right, on the right side of the base. But yeah, so those are the few groups that I think are doing well. The steel alloy group, like I'll just mention this, it's really strong as well. HWM, see, these are making new highs on Friday. CRS is the other one. Okay, this one, it closed lower in the range, but yeah, still trying to hold on to this 10-day. We'll see, but it is, you know, near new high. Okay, so that's commodities. Let's jump back to tax, because tax, you know, because that's where you're probably more interested in. So what is there any stocks you want to look at first?
Yeah, there are few. Once again. Yeah, so JPM, CAT, Tesla, not tech, but mix bag. Then yeah, Microsoft, Apple, Google,
Yeah.
Amazon.
Okay. So these two positions I got into this week. Perry, they announced preliminary results on Thursday, I believe. So you can see this. You know, I'm gonna take away this cup for a second because it's a little bit distracting. This trend line, like, you know, sent me the alert. It broke up, and I was like, what's the news here, right? Like, it's a big move, and then they announced preliminary earnings result, which is better than forecast, and give higher guidance. So obviously this is a laggard stock because it hasn't participated in the run, right, in the rally, but because of that now, you know, it has, how do you say, so okay, let me go back to daily. It's quite easier to explain. It formed this low right here, and then it tried to test that low here. You see, many days. See, it never undercut that, right? So it shows that just not many people willing to, and then volume dry out. You can see how look at the volume just dries up. Like no one wants to sell anymore. And then the news came out, and boom, right? Like look at this volume, giant volume. And Thursday was a down day. Remember, most tech stocks were down, and this was very, like, it was like one of the few green stocks. And so I had to take a position just because I like Perion before. It is a growth stock. But it just didn't participate for some reason in this recent rally. And then now they come out with, you know, good guidance and good numbers. Now, hey, you know what? Whatever people fear during this time that the company not going to do well, actually is not true. At least based on what they just released, right? So now this is a low entry point, low risk, I got in. And if it does come back up the right side of the base, then that's really good. And if it breaks out, even better, right? So Perion is one of them. DigitalOcean. This one, it pulls back pretty hard recently. You know, again, it did almost, I don't know if it did make 20%, but pretty close to it. Very fast. Look at this, like 8 sessions, it made 20%. I wasn't in it at that time, and then it pulled back pretty hard, and then, you know, again, you can see my trend line down here, and then Thursday was the day. Again, same thing. This was one of the standout stock on Thursday when everything was down. And I couldn't find any news on it. They must, I think they did. They bought another small company to increase their, I don't know what the purpose of that is. But anyhow, the market really likes it. and and in the morning it was up like 7% already, and I was like, ah, should I buy it? It's already up so much. And then, but you know, that day was so red, and I'm watching it, it just wouldn't come down, even though the whole market going down. And then by the end of the day, you see it closed 13% up, and then Friday it went up even more. So look at how fast this moved, right? Just incredible speed. So we'll see, like, you know, if these guys can hold. Like I said, right now buying tech stocks is a little bit more risky just because overall they're not doing as well. So even though these are reacting based on, you know, news, they're both doing well right now, but it could mean that they can come back as well if the market continue the tech stocks continue to deteriorate. So there's a lot of risk, right? But it's just the volume that really shocked me, how much volume there is. And I was watching them so closely on Thursday, like they just both of them wouldn't go down, no matter how hard Nasdaq keep going down. Yeah, let's jump to the big cap for. So let's look at Nvidia, just because, you know, that's the Titan, and this is incredible strength. Like, look at even the day it went below the 10-day, it closed at the top, and then on Friday it obviously came back above because it was an update for Nasdaq. But it's just overall, this stock is just so strong, no one wants to let go. Again, this is the AI stock, and yeah, like I don't have much position in this. I finally took a small position in this a week ago, but I'm how do you say, it's hard to buy at this stage just because it's just run so much already, right? A lot of people are saying, you know, at least for those people that are underweighted on this stock, they're all saying, you know, we're all hoping for, you know, at least a correction to the 50-day. So we don't know if that's gonna happen. It might not happen. The last time was right here, was a while ago. So that's Nvidia, but it's acting really well. Microsoft is another potential AI play. This has weakened more, but it's still holding above the 10-day. That's still incredible. It's just going sideways now in a small range. Again, if the Nasdaq continue to deteriorate, we'll probably see all these guys going down. So this one, the chart doesn't look as good just because of this peak right here. And you can see it never even come back near halfway point. So that's another sign that it's like an L shape right now, right? Anytime you see L shape, I would beware a little bit more, just because L shape is tend to be a bearish pattern. Google, I think it was trying to rebound this week. Yeah, there you go. Wednesday trying to rebound, but then it fell on Thursday, undercut the low. That's the negative sign. Again, when you have reversal like that, you know, I call it the fake move, right? Anytime you see fake moves, they tend to go back the other way even stronger, just because people who were sucked in, they're really like want to get out after that, and if they don't get out, they're just gonna get burned more. Usually that's what happened. So unfortunately, Google is probably the weakest of the Magnificent Seven. Yeah, let's look at Amazon, holding really tight. Apple, I think make a new high this. Okay, that was last week. Make a new high. Now it's coming back. Yeah, I mean the mega caps is really what's holding the Nasdaq, right? Like I think. And then we'll look at Tesla. Did we look at Tesla yet? Yeah. Again, this one make a new high this week. Really strong. And then we'll see. It's still way above 10 days. So this is probably the strongest right now in terms of all the big caps. So let's just jump to QQEW, the equal weight. So this is the equal weight. So forget about the, you know, just the big caps for now, and look at every single tech stock, and you can see right now it's below 10-day, below the halfway point. So this is a very tight range, which is a good thing. Like if this tech market can digest sideways, that's good. Like right now we're in 2.5 weeks probably. Right, 2.5 weeks. Yeah, depend. Probably you can say 3 weeks. So it's 3 weeks now. 1, 2, 3. So with 3 weeks digestion, it's not a bad thing, right? Like usually 5 weeks is what we like, at least for a small digestion. So that's good. And then we look at RSP, which is the equal weight S&P. So again, same thing here. It did make a new high. This one's above 10-day, and it's in the upper range, right? It's in the top of the range. So that's very different than. So you see how it's closer to the top than the bottom. So this one is acting really well. Yeah. So those are the equal weight. It's important to look at equal weight because again, we want to see breadth in terms of where the market is. Let's jump into the accumulation and monitor. So you can see this week the industry groups were doing okay. Monday, Wednesday, Thursday it turned red, and then Friday it came back a little bit, just by a tiny bit. And then same thing with the stocks, accumulation more on Monday, Wednesday, but then Thursday, Friday a little bit more down. I didn't do this part yet, but anyhow, the groups that are doing okay at the beginning of the week was retail, industrial, and financial. Tech stocks are weaker, and health stocks are really weak this week. So last week I trimmed a lot of health stocks because you can see last week, look at this, right? Every group was okay except for the health, and so that was the relative strength I was talking about. Like I had a lot of health stocks that I had to trim just because they weren't acting well when the market was doing well. So usually you want to trim the poorest performance one, and it continued this week. You see, so the health stocks, I don't know why the medical stocks are, pulling back so hard. That's very interesting from that perspective. And then we have JPM. So this is going to be big, right? Because it's going to announce in a few days here, and by the end of the week. So it's just holding tight near this breakout point. So I think it looks okay. It's definitely, I think we need a catalyst, right? We need them to say, hey, consumers are fine, and I think they will do well. I think we'll see. It's holding really tight. It's a nice pattern. I like it. Volume's drying up. See, usually when volume dry up, it's usually a good sign. So if there's a catalyst, it's gonna show up pretty hard. If it's a good thing. Caterpillar is very interesting. Again, we see that this is one of the Dow in stock, I believe, because Dow didn't do well this week, but this one did well. Look at this one, right? Again, volume is drying up big time. Look at this volume. Just no volume. Three weeks of strong volume, it climbed, and then it's like going sideways. 3 weeks of lower and lower and lower volume. So again, even though industrial is not doing well, this guy is doing really well. So this is a nice cup with handle pattern. Like this is as nice as you can get. And usually when a large cap forms a cup with handle, you want to pay attention to that because it's like a classic pattern. And if it's on a liquid stock, like once this breaks out, it will go because it's just how it works, man. I remember Apple was the same thing when they had a cup handle before. You think it's so big it won't go, and then it went. I think that was the time it went up 45%, like in 10 weeks or something. Like, you think this big cat it won't move, it could move. Like this is a classic pattern. Somehow those patterns just signify that there's a lot of people getting in, and you can see that here. 3 weeks of strong volume. So these guys are holding strong right now, and then there will probably be more buyers as this breaks out. And this is a strong fundamental stock right now. Look at this earnings, really strong. And so again, this is machinery, construction, mining. There's no recession. This is not a sign of recession. This week, there's not much news. Oh yeah, there is news. CPI, right? Wednesday. That'll be important, obviously. But the market is already expecting a lot of a raise soon, right? I think, what was it? 92%. Let me go back to July. Yeah, 93% now. They're gonna raise rate one more time, but the forecast for September, November, December is no changes right now, which is good because I think previously we saw is that they could raise in November again, but this time it didn't raise in November. I don't know what happened. It still stay. It's gonna raise from 5 to 5.25, and then it just stays there for the rest of the year. So yeah, so they're gonna raise one more time, and then they're gonna hold probably most likely through the rest of the year, assuming like again the CPI data is not gonna come back up, right? So we'll see. So that's very important. So this is, yeah, we already talked. So right now expecting 0.3% forecast. This is month over month. Yearly, it's gonna drop to 3.1%. That's good news. I think if we can hit 3%, oh man, I think market will be very happy. So that's really low, right? It's getting down lower and lower now. So yeah, so I think it's good. I think this bull market can have room to run if this is gonna happen. So obviously the sentiment right now, at least based on newsletters and this survey, AAII survey, it's pretty high, 48% bullish.
After then, is your brother painting करा गया उसे chalk थी.
48% bullish.
Yeah.
We are extreme greed right now, which is not good. It's getting, like I said, it's getting greedier and greedier. So we near the end.
Yeah, this is what is.
So yeah,
like, I'm looking at this, and that's why I'm like not going full in. But it can still stay up for a long time.
Yeah. One more GMI. Let me go find that index here. Okay. Oh, because I'm on weekly chart. That's why. Okay, so this is daily mark. Yeah, so this is Nasdaq. So yeah, we already looked at advanced Thailand. This is not the one I want to look at. What was the other one? Oh yeah, this one. Nasdaq. Okay, here you go. So this is the short-term overbought oversold oscillator. So in terms of based on this indicator, it's not overbought too much. It's kind of near neutral still. Usually, David Ryan said if it's close to 500, see right here, that's when it pulls down. So you know, see like around here, 500, close to 500. But right now it's not. It's only at 134 right here. So it's not overbought based on this oscillator, right? So that's why it's good. Volume on the downside is going down, but on the upside it also moved up, so that's a good sign. The lows versus highs, they're almost the same, which is not good. We want to see more highs than lows, but this week is definitely obviously not as good. So yeah,